sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Another day of gains here for the markets this Wednesday. We're up 90 points once again. This is the last hour on Closing Bell. Coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Mangalam. Guys, hi, good afternoon.
Good afternoon. You said another day of gains. You can add a sentence to that as well. Another day of maybe some bit of profit taking at higher levels as well. 23,400 on the Nifty continues to see some supply, and same the 50,000 mark on a closing basis for the Nifty bank remains elusive.
Well, that's right. And I think in the next 1 hour or so, it'll be interesting to see how select stocks behave. Like tech stocks, they have come off the high point of the day because we're getting into a big event later today. And if the Fed chair sounds a little bit more hawkish than expected, then normally we see some profit taking. So I think some pre-positioning is what we like to see on some of these counters.
So far, last two meetings, he's kind of said, "Jane do, aage dekhte hain."
I think that's what he's likely to say.
People are fed up of the Fed. They're like, just tell me you'll be cutting or not cutting.
No, because, you know, the last the monthly data that we got on Friday was super hot.
Yeah.
Right? It was a blowout. Yields went up 15 basis points. So actually, there should be some reference to it. But last two meetings, he's spoken right after very hot data and he's ignored it. He said, well, I think the big thing to watch is not hikes but cuts. Maybe not in July, maybe in September, but the first thing we will do is not a hike but a cut. So I think that's
remember when we
focus.
started the year, everyone was penciling in 4 cuts. That has now come down to 2 cuts. And in that as well, the cut in December, the probability of that, which was earlier 100%, has now come down to 60%. So one wonders.
And it's quite tricky, right, when you see these data points, that this is the jobs data. It's red hot. But then that internal is not so hot, and that is a little softer. So that's the way it is. So let's see what we get later.
Although this data, all three were, so for once we had that.
Well, then you have some, incremental data coming in from Steve Leisman saying that, the underlying consumer economy is weak and all of that.
I think we'll have Steve Leisman with a Fed toss, with a Fed preview from our network in just a bit from now. But, just a couple of points before we sort of move this conversation forward. As I said, we're off the highs, but also it's still a pretty strong day. Broader markets are doing well. PSUs, once again, the toast of town. You got CPSE, energy, oil and gas, PSU banks. Take a look at that. So very strong gains. Small caps, mid caps flying high. Of course, there's a lot of overlap across the sectors that I mentioned here. FMCG and real estate, I think it's easy to count what is down. As pockets, these are the only two spaces which is actually even down about 0.25% or so. And the last high, I think, is what everybody... naturally, supports, I think, are important, but they are in the context of what we've been seeing for the last couple of days, not really coming into focus. So 23,411 is that number. Bank Nifty, by the way, is underperforming a little bit, at least on a day-on-day basis. Nifty Bank is up, I think last I checked, 0.25%. But it's the middle of the range from the days, if you look at the high and the low as well. So I think the drag, of course, is coming in from private banks, which are still not doing very much at all. It's PSU banks which are doing a lot of the heavy lifting. Guys.
Hi. So a bunch of these stocks which are doing well, we have themes which are doing well. Today's theme perhaps could be logistics. There is news backing some of these stocks, but the news isn't enough to justify the kind of moves that we are seeing. For instance, everyone's talking about the way Container Corp has been moving. There has been a Morgan Stanley commentary coming in from their conference call as well. What they're saying essentially is what they had said after the conference call of the earnings itself. Have they upgraded their EPS estimates or something? Perhaps not. They still have that equal weight rating with a target price which is a good 100 rupees off current price as well. The stock's moving higher. We have TVS supply chain. The management joined us here at 1:30 saying that this order that they got from Daimler is part of the earlier inflow that they had given, the guidance of 4,000 crore worth inflows coming in this year. So this is nothing additional that has come by. The street still likes it. And as we speak, Paytm, that's one stock which has suddenly found some wings. Moments ago it was up 5%, and now as we speak, it spiked to the high point of trade with a gain of almost 8% with volumes piling up, Nigel.
Well, that's right. Paytm is one of the big movers in the last few minutes. From around 2 p.m. onwards, that stock suddenly bucked the trend. It's up sharply, in fact, a 10% uptick is what you're seeing. And besides that, some select names that are coming back to life. IEX has moved to the high point of the day, so maybe it makes good sense to pull that one up. Berger Paints as well, that's another stock that was trading in the red at the start of this hour. that as well is scaling up as we speak. And from the FMCG basket, though the index is lower, I think Dabur is doing a relative outperformance out there. 40% of their mix comes in from the rural area. And also the beverage part of their business is expected to improve. It's been one of the outperformers this year, in fact. I think year to date it's up close to around 20%. So that's one of the few stocks in the FMCG pack that are in the green. Well, let's get in some closing strategies. Then we have Mitesh Thakur who joins us on the show. Hi, Mitesh. Good afternoon and good to see you win. Big event coming later this evening. What's your take since we're facing resistance at around this 23,400 mark? Take money off the table, book your long position and take a fresh call tomorrow? Or will you want to, continue with the long position and in fact trail your stop loss?
So I think, I would want to book for profits if I have any. I think, Nigel, we haven't still been able to decisively get past this 23, 380, 390 zone. We're just kind of hovering around there, not giving a decisive breakout. It's not very comfortable for me at higher levels when you have multiple, pivots at the same point. So take some profits of at least book, if not full, at least book 50, 60% of your index positions. But on the stock side, the bias remains on the long side. So I have some buy calls right now. Canfin Home, I think that's a buy with a stop at about 795 for targets of 835. And the other one which I like is Chola Finance. That's a buy with a stop at 1344 for targets of 1410.
Right, Mitesh, so those are your picks. Just keep an eye out on a couple of these stocks. Oil marketing companies, they're doing, they're moving around in today's trading session. And that's largely because HSBC expects to see continuity in the policy for the sector, as we had heard from Hardeep Singh Puri yesterday as well, as he assumed charge of the ministry. Sonal joins in to tell us more of what the street is anticipating this time around. Sonal.
Well, most of them are positive about the fact that there is policy continuity. There have been a number of brokerage reports over the last couple of days as well. There is a note from HSBC today on the oil and gas and especially OMC space, where they see continuity in policy for the oil and gas sector, and this is something that they are positive about. The pace of significant reforms, however, they think could be a little slower than what was anticipated. But low oil prices, that should remain the key, and that is something which could move the needle as well. Oil demand growth slowed for May, but the marketing margins, they have been quite strong. The GRMs have been on the softer side. Their buy ratings on OMC stocks are premised on the oil prices remaining below that $85 per barrel mark. So they remain positive, but again, it relies on the fact that oil prices should remain at moderated levels. GRMs fell to $3 to $4 per barrel range in the last 1 week, but marketing margins have improved meaningfully to 5 to 7 rupees per litre. And remember, at a point in time in Q4, they were just around that 4 to 5 rupees per litre mark. Petrochemical spreads continue to be weak on account of weak Chinese demand, but HSBC continues to be positive on oil marketing companies.
Right, Sonal, thanks a lot for that. Good time to welcome Prakash Diwan, then market expert, as always, joins in. But, just before we go to him, Bharti Airtel, that's the stock which has moved to the high point of trade. We're seeing some traction come by in a lot of these telecom names as well. Vodafone Idea, of course, has been on a tear ever since the fundraising plans were announced in the last 12 months itself. The stock has more than doubled, obviously on a very low base. Let's see where it goes from here. 16.5 is what the stock is trading at. Remember, the OFS price was close to around, or the FPO price rather, was close to around 11 odd rupees. So it's a big mover from there itself. Prakash, most on the street were hoping for some sort of increase in prices, tariffs post-election. Now we're post-election, policy continuity is expected. Do you think there could be a round of hikes in telecom tariffs?
Oh, absolutely. Absolutely, Mangalam. I don't see any reason why they would want to delay this. It's been in the making for almost a year and a half now. This is coming after a lot of rationalization in terms of SIM usage that they've done, which means that they will be able to not have any negative impact, unfavorable impact of a price hike. So they've kind of laid the decks for it. My expectation is that Bharti and Vodafone would probably do it in tandem, almost together, and then Jio would probably follow suit because they would have the luxury of still acquiring newer subscribers as much as against the other two incumbents. So, but you should be able to hear it in the next 2 weeks for sure.
Okay, all right. Prakash, I wanted to ask you about a couple of these diagnostic companies. Thyrocare has been a big underperformer. I think when Dr. Velumini, sold a few years ago, the stock made a peak and it never saw anything close to that. The other names, though, they have got a little bit more expensive, Dr. Lal's, Metropolis, but they're delivering numbers as well. In the last results, though, Thyrocare, well, it showed fairly decent numbers. Your view on the stock in comparison to the other two?
So, good afternoon, Nigel. So, there is a reason why Thyrocare is going through what we would call a consolidation phase of sorts. The reason is very simple. They were more of a B2B provider. And they actually, if you look at the growth in the last many years, they have thrived on the fact that there are a lot of smaller labs which are connected with them on a hub and spoke kind of a model. Now, if you realize a lot of these smaller labs have suddenly started getting options, they've started building their own capabilities by getting machines and equipment in the right sizes and right capacities, which means that your B2B business will get impacted because there are no new addition, new incremental connections that are coming through in that hub and spoke. So Thyrocare is going through a little bit of that, and the new acquirers probably have a relook at the business model also. So it probably worked well for the earlier promoters. The new acquirers would probably want a faster rollout, a more B2C kind of an outlook. So all of that will probably take some time, and that's exactly why you have the likes of Dr. Lal, even other ones that Metropolis and all catch up much faster and beat Thyrocare in terms of market share and revenue growth. So Thyrocare has had its issues. I mean, they're not challenges which can't be surmounted, but right now it's going through that reinventing stage for some more time.
There's always that optionality with Thyrocare, the pharmaceutical company, PharmEasy,
The parent.
The parent, that is. So the street is hoping for, at some point, if there is a listing of that and all that.
Well, another one I want to just highlight quickly is IIFL. The news just came that they are finally going to release the results for the fourth quarter on the 15th, 15th of this month. So that is a Saturday. Remember, after the RBI restrictions came through as far as the gold loan business is concerned, IIFL did not release its fourth quarter earnings or, the full year numbers as well. The audit, which was mandated by the RBI, was finished last week. Ritu had highlighted this. It was a sort of intimation to exchanges as well. Now, will this be read as perhaps, this entire saga coming to a bit of seeing some closure? We don't know, but the audit is done. And of course, now it's up to the RBI in terms of when they want to, what kind of, what they want to do next with regards to the results of the report, the audit report that they have. Stocks come up actually from under 400 in 4-5 days. It's come up to about 473 now. Sun TV is the other one which is buzzing in trade. It's a 52-week high. Axis Capital wrote a note earlier, and they're citing comforting valuations which have some sort of comfort levels built in. Vamakshi is here with details. Vamakshi.
Well, absolutely. Sun TV surging in trade on the back of that note that came in from Axis Capital. They've gone ahead, retained their ad rating, but increased their target price to 810 per share as compared to 600 rupees per share earlier. Largely, they attribute this positive price raise in terms of the outperformance as far as peers are concerned. Sun TV's ad revenue growth saw an uptick of 2% as compared to Zee's 4% decline, and despite high competitive intensity, market share remains stable in Tamil. They've managed to lose significant share in Telugu as well as Kannada. In fact, market share in newer markets of Bangla and Marathi also remains low at 2 to 3%. But nevertheless, they are targeting to foray in the Hindi market through Sun Neo. But the scale up in the content investments is expected to be gradual. Now, the other piece of the puzzle is their IPL business. The sports business is seeing a healthy EBITDA surge. And in fact, given the improvement in performance in the company's team in IPL 2024, they are expecting a further uptick in the revenue as well as profitability in FY25. Apart from that, when we look at the valuations, they too are quite inexpensive. In fact, they also believe that there is optionality in a share buyback or a one-time dividend payout or a possible demerger of its sports business, and this in turn, if materialized, could potentially unlock value for the shareholders. So given all of those factors, they've gone ahead, maintained their ad rating, revised their target price upwards to 810 per share.
Okay, all right. Thanks a lot. Neatly put, Vamakshi. Thanks a lot for joining and giving us those details. Well, Prakash Diban is still with us. Prakash, what do you make of this one? I think we discussed this, a couple of weeks or so ago as well. I think 100 rupees lower or thereabouts. The political tailwind came about for them with the DMK doing well. Valuations appear fairly okay. They have outgrown the only other listed peer. And cash in the books is something that the street likes. The big trigger from here on is how do they use that cash and will they unlock value in the IPL franchise? At these levels, how do you approach it?
So Nigel, you said it. All of that was largely attributed to the political tailwinds. That time it was headwinds, now it's tailwinds. But I don't think there's any demerger that's on the cards. I mean, we've heard this so many times. It's been available at these valuations for a fairly long time. It's just that the market is now seeking, newer names to latch on to. All the rationale that this brokerage report actually talks about have been around even 6 months back. So it's not that there is any new development. The only thing that changes is that you'll probably continue to see this being the only allocation option that people have to make if Z is not available, as a veritable alternative. But I believe if you look at the market share in terms of the television channel network itself and the coverage itself, you probably have far more superior gains that the Network 18 group would be making. So people forget that has a fair smattering of regional channels as well, presence as well. It's just that the Sun TV library is good enough for them to be able to sustain. Ad revenues coming back has got more to do with consumption and FMCG growth, and that will work for everybody. So I wouldn't really buy into this, just because of this change that's happened. Right? Whatever had to happen is already been priced in. Maybe you have another 10-15% of an upside because of the tailwinds, the political changes in the state.
Take that point, and credit where due. Actually, Sun Next investments in their digital content library hasn't been as aggressive as some of their other peers, which keeps them better balance sheet wise. And also, before this, they also would depreciate all or exhaust all their assets in that particular quarter. They've changed that method as well. So all those work for the company, as well as they provide predictability in profitability going there. But Prakash did speak about Network 18, of course. So with the usual disclaimer that this is of the channel that they're watching.
Absolutely. Prakash, I think we spoke about Dredging Corporation. There was it last Thursday or Friday. Stock was at about 850 rupees. It's had a vertical move higher. Just your thoughts on what's happening? What's the story here playing out? And is it a time to move on to something else, or there is more here in dredging?
So yeah, I know you need to kind of dredge deeper and get the silt out. Yeah, but interestingly, Prashant, last Friday when we spoke about it, it was in the aftermath of the debacle that we saw, the exit poll at the counting day and all that, and this stock also took a beating. Also, it had its numbers released just a week, a day before the exit polls came through. And there was this one-off loss that people were very worried about and things like that, in spite of the fact that the management gave out a commentary and they said we'll probably cross about 1840. I don't know why they've chosen a specific number like that, but they said 1840 crores revenue is what we are seeing for the current financial year. Now, with that kind of a revenue build-up, which is significantly better than what they did last year, and the margins that historically they have been doing, you couldn't have gone wrong with a company that was at that point available at 2,600 crores market cap. I mean, these are businesses that are extremely difficult to replicate the kind of relationship, the kind of expertise, experience that they have. And remember, India is a country where you have port development as probably potentially one of the biggest infra spends that could happen. I mean, you've seen the way the Adani ports and the JSW infra networks have been expanding through inorganic and organic routes. Dredging Corporation features and the shipyards. Don't forget, I mean, we are so bullish about Kochi shipyard and GRSC and Mazgaon. There is no way a shipyard can work without dredging as a service. So this is something which goes along. It's a picks and shovels story, Prashant, to be honest. So there's lots to go. But then, of course, the upside, as you said, it's already done about 30% after we spoke. But I would rather look at this business, divorced from the election outcome, divorced from, what's happening on PSUs. Otherwise, on a standalone basis itself, I think there's enough merit to look at.
Okay, well, Prakash, we'll leave it there. Thank you very much for your time. Interesting chat as always, and thank you for that. We'll take a break. We are back with Aditya Sood of InCred on the other side. The conversation continues. Markets up, back up about 100 plus points, 110 now, 23,375. Stay with us. All right, welcome back. You got the market up 100 plus points as we've been pointing out, and is looking like a good screen. I mean, market breadth is 2.5 to 1, 1,800 stocks higher, but 800 stocks are lower, and just incredible. I mean, actually, exchange stocks perhaps are the other ones we should focus on, and maybe we could put up BSE, MCX maybe as well. BSE, we know that especially because of what's happened last week. And I think when the first quarter numbers come, we'll have sort of the impact of all of the volatility. I mean, humongous volumes, record trading volumes, not just on the cash side, but on the option side, etc. as well, which will show through. So BSE, of course, the high was about 3,300. It's come down to about 2,700. But it's such a huge day after day volume days that we are seeing both on the cash and the futures and options side. More on this as we go on, but Aditya Sood is with us from Incred PMS. Aditya, good afternoon. Great to have you with us here. I think we're speaking for the first time after the entire election results and the resultant sell-off and then the one-way rally. So I just want to start by putting that in context. Did you do anything last week? Were you able to buy anything? You were always someone who's looking at out-of-favor names, not really chasing the momentum at all. In all of the interactions that we've had with you, that's come out clearly. Last week, suddenly you had pretty much across the board sharp 20-25% sell-offs.
Sure. So I think so we were very well placed, going into the election result, because we were sort of having an underweight positioning on PSUs generally. But what we were in a position to do is to augment our exposure in terms of, increasing our exposure to, names that we like. We have, increased our exposure to financials, because clearly post the elections, and that was getting reflected on day one, when we saw the result coming through, there was a clear-cut moving of money in favor of, IT and FMCG, and consumer overweight positioning for us continues. So, I think so the complexion of the market in terms of, how the market sees sectoral rotation going forward is going to change. And, thankfully for us, last 2 months, we have been overweight on IT, consumer, as well as, automobile. So that, positioning continues. Financials is a new one, wherein we are trying to augment our weights, in this environment, wherein we see, again, a shift from possibly, money moving out from PSU banks in favor of, some of the NBFCs or well-managed private sector banks.
What kind of FMCG names are you overweight on? Are you playing it via the large listed players which are underperforming, or are you looking at the second rung names? Because FMCG is now seeing that schism as well. The mid-cap IT, large-cap IT names. Similar is the kind of move that we're seeing in FMCG too.
So one of the themes that we like as an overall construct of our portfolios is that, we would like to buy great businesses when they have underperformed for a prolonged period of time. So clearly, if you look at the FMCG construct, be it a Dabur, which we obviously have a holding, and, be it a Hindustan Unilever, what we have seen here is that, the PE multiple compression is behind us in our view. And obviously, rural has not done well, and we have been playing this rural recovery theme for last 6 months. It started by our overweight positioning on, Hero Honda, essentially. It spilled to now, companies like Barbecue Nation, wherein we believe that, it is going to be a part of discretionary pack. So I think so from a consumption standpoint, clearly we see limited scope for PE multiple derating from here on. Plus, there is also an element of, under ownership in a lot of these names because, clearly these are low beta names in the portfolio. So we have seen, fair bit of positioning, getting changed, and Dabur and Unilever have outperformed recently. But our view is that, any company on the consumer staple side wherein the go-to market is very, very clear in the sense that they have, invested a lot in terms of augmenting the go-to market or distribution reach for last 2-3 years should benefit. And what we have also seen of late is that the volume growth has started to, outstrip on the rural side versus the urban side. So I think so these are clear signs of, consumption stocks doing well going forward.
All right. Hi, Aditya. Good afternoon and good to see you in. This is Nigel on this side. There's this debate about consumption versus capex. I have a sell-side analyst, on cement, and he said, leave both of them, buy cement. And some of these cement stocks are doing quite well. That's a third C in there. As we speak as well, there is some optimism that maybe pricing has bottomed out, demand will come back, infra push, housing push. Do you all have any exposure to cement?
Yeah, so essentially, the large cap cement names, if you look at, possibly Ultratech or Ambuja, they are trading northwards of, $200 EV per ton. One of the things, which is a very, easy way to value cement is that, either you are in a, rupee devaluation environment, which clearly happened, post 2008 to 11, wherein, people were benchmarking. So the new benchmark for large cap cement, and obviously, the industry has consolidated. What we like in this space is smaller mid cap companies, which can be consolidation plays for the large cap companies. So if you look at, anything which is closer to 10 million tons in terms of capacity, that is what we have seen, getting re-rated over a period of time. So we believe that there is a huge consolidation play here. If you look at players in the South, particularly, what you'll find is that, a lot of the players are not making money at this point in time. So it is going to be more consolidation play because ultimately what we expect going forward is that, there is a very simple roll-up which can happen in terms of multiples. So we prefer the mid-cap cement guys. Possibly our filter is 10 million to 20-30 million in terms of pure capacity. And obviously, these should be complementary in terms of, large caps acquiring, the small cap or the mid cap cement plays.
You want to give us some names between the 10 to 20 million? We have a few that are flashing for our viewers on the screen, some large ones as well, 20, 50. But from the ones on screen, I can see JK Lakshmi Cement, Sagar Cement, NCL's too small, couple of them. You want to name any of them, Aditya?
We have only one holding. Obviously, this is a disclosure. We only have Orient here. What is also very important alongside is that, how is the cost curve and whether they have, limestone reserve to last. I think so that is going to be the key apart from the region.
All right. And that's on its way to that 10 million ton plus. Mr. Ketrapal keeps telling us that, from 8.5, we're moving to around 11 million tons. So we keep pushing him on that. And for the time being, he says the company is not on the block. So we believe him.
All right. So we'll keep that in mind. What about the fourth C? We've spoken about consumption, capex, cement, chemicals. A lot of people are believing that, the oversupply, the glut because of which prices were lower is now turning. Maybe demand is catching up, and going forward, this will play out in terms of prices for a lot of these companies as well. Usually a cyclical play, but where are we in the cycle according to you?
I think so. We are closer to mid-cycle. One thing that we shouldn't miss is that, the top 5 players are close to, possibly 55% of the capacity, but profit pool is something that needs to be analyzed here. Because quite like, other industries, the 70% to 55% capacity market share could lead to a 70-75% profit pool. So and obviously that is getting also reflected in valuations of large cap companies, because clearly there is a belief that, these companies will continue to grow and improvise on their, fuel cost or, the freight cost over a period of time. Obviously that is very, very critical from a standpoint of, looking at consolidation plays. So our focus is to focus on profit pool across the value chain rather than optically looking at, market share.
Aditya, on the capital market side, and I don't know if it's your cup of tea. You did mention financials, but I don't think you meant capital markets. But have you looked at that space, exchanges, asset managers, etc.?
Yeah, we have, we hold MCX basically. MCX obviously is a play of, financialization. And obviously it is a commodity play as well, wherein gold and crude, obviously it is in a monopolistic sort of a situation. 3 years back, there was a big debate that whether, MCX positioning is going to be, challenged by, either BSE or NSE. I think so. MCX is an excellent play. And obviously, we see a similar option sort of a story getting played out on the commodity side as well. So we have MCX in the portfolio. In the past, we have held, CDSL. The only problem with, proxy plays here is that, these companies are great stories from a 5-year standpoint. But the only thing is that, there is cyclicality. We have held CDSL in the past, but we don't own CDSL today.
Where do you stand on the entire PSU rally? I mean, one can't paint them all in the same brush, but you do have PSU Defense, you have some of the rail-focused stocks, then you have a bunch of PSU banks, then you have PSU financiers, PSU power financiers. Where do you stand there?
So we have held BML in the past. The rail story is something that we like, but obviously valuations are getting very, very steep here. And BML is something that we think is structural in the sense that, it is a one of its kind asset. Obviously, it was up for divestment. Obviously, we'll see how it evolves, post the new government coming in. We also have exposure towards, PSU financial companies, particularly on the housing finance side. So we own LIC Housing Finance. We believe that it is a cheap stock to own. OPEX growth is accelerating. The best in terms of, asset quality is yet to be delivered. The stock was cheap. Possibly they are moving towards a 1.2% ROA trajectory. The stock is under-owned by most. So we like the low-cost housing finance space. And this is, again, a part of a theme wherein, money is going to move from PSU banks to private banks. And within that, we like low-cost housing as a space. We also have exposure in a company known as FedFina Financial, which got recently IPO'd. We believe that it is a structural story. 55% of their loan book is a combination of, mortgages. 35% of their loan book is gold loan. Obviously, they benefit out of this NBFC turmoil on the gold loan side. The cost of their cost of funds is, close to 7.8. Obviously, they have a backing of Federal Bank as a parent. So we like, both these themes on the housing finance side. Right,
Aditya, thanks very much for that. We'll leave it there. A great conversation, lots of stocks and lots of ideas, at least in terms of what you own and the rationale behind it. It's the moment of truth. When we started talking about the late hours sort of possibility of the market coming off, we have given up about 60 points, actually 70 points from the day's highest level. And we're at 23,300 now. So, when we started that conversation with Aditya, we were at about 23,400, close to 23,400. And now there is a steep fall, which is materializing. The 3 p.m. move, absolutely.
The Nifty Bank as well. The Nifty Bank, not as much.
Not as dramatic as the Nifty, but it is showing up.
Gain of almost 200 points off the highs of the day, but not as dramatic as the Nifty. The Nifty is down a lot more. So just keep an eye out on what's actually declining. Nigel, can you see something? IT maybe, I guess. is the one which is seeing some correction. Actually,
Grasim has slipped a little bit. You have Mahindra and Mahindra. Pull up a couple of these names. Yeah, IT has come off the high point of the day. So I think a couple of these names should come. Grasim, yep, that's the one that's fallen. Adani Ports as well has slipped a little bit. Mahindra and Mahindra as well.
And FMCG
to the low point of the day.
And FMCG continues to extend its losses. So we have HUL, which has moved to the low point of trade. Britannia has moved to the low point of trade. In fact, the entire index should come up for you. The only outperformer there is Dabur, which is holding up in the green. But let's move on and talk about the real estate space. A South India-based real estate company that's had a stellar run is in focus, as it may hit the primary market soon. Which company and what vertical is an IPO being planned for? Vivek joins in with more details.
Well, good afternoon. What we understand from our sources that South India-based Prestige Estates, may soon be hitting the primary markets. We understand that the company that had earlier indicated that it may be looking to raise funds in its hospitality, vertical, and it will be hitting the IPO market soon to go ahead and, raise funds for that particular vertical itself. We understand that the company has already gone ahead and locked in investment bankers, to go ahead and manage this particular issue. We understand that JM Financial, JP Morgan as well as CLSA have already been appointed, almost finalized as bankers to go ahead and run this particular IPO mandate. We also understand that the main purpose, number one, is to do value unlocking, and number two, the company has aggressive plans as far as the hospitality business vertical is concerned, and on the back of that wants to go ahead with the IPO. The company, we understand, is looking at a valuation of close to 17,000 to 20,000 crore for this particular vertical itself, for this particular business itself, and the size of the IPO will be in the range of 2,000 to 3,000 crore. The company is currently softly talking to bankers in order to gauge the interest as far as how exactly the valuation and the pricing could be done. Remember, this is something that the street has been anticipating and has been asking of the company for quite some time. At the end of Q4, in the investor meet itself and in the analyst call, the company said that the business demerger is on track, and in fact, they also indicated and hinted that the IPO could be done within the next couple of quarters. So this is an important development to track as far as Prestige Estates is concerned. We reached out to the management of Prestige Estates. So far they have not yet responded to our queries.
It will be very interesting to see whether they, go ahead and get the kind of valuation that these guys are seeking, largely because the only other listed play which is similar to this, a real estate company which runs hotels as well, is Chalet Hotels, because they have the Raheja Group, real estate business, and then they have the hotels that they run out there. They would have, if I remember correctly, over 3,000 keys, and if I remember, Prestige Estates, their hospitality business has about 1,500 keys. Chalet Hotels' market cap is close to 18,000 crores. So if these guys are seeking the same sort of market cap as Chalet Hotels right now, then maybe they would have to increase the number of keys, or there may be some more in terms of value for the shareholders. But good time as any to get in, value unlocking for the hospitality business, because the sector is on the turn.
Good turn for getting value anyway. Market cap of Prestige is almost 74,000 crores, actually 74,500 crores. So, they're looking at, I saw that flash, 17 to 18,000 crores is what they're valuing the business at. So about 25% of the current market cap of Prestige Estates. Prestige, of course, itself has had a phenomenal run over the years. Well, more on this one, but that's an important story. We will continue to track and probably try and have the management speak with us live as well. But that's a source-based CNBC-TV18 exclusive for now. Let's move on. CPI for the month of May is due to be released later today. We also, of course, got the IIP numbers, IIP for the month of April and CPI for May. Lata is here to tell us what we can expect. Lata.
It's expected to be a benign number at 4.9%. That will be very similar to what it has been over the past few months. As you can see, compared to April 4.83 and the year ago 4.25, 4.9 will be seen as benign, and this includes a core CPI number, which is non-food, non-fuel, that part of inflation which is sticky, that is expected to come in at 3.2. I'm saying 3.2, it's rounded off. Actually, the average I got was more like 3.15, 3.16. Now, the score has been consistently falling. Look at the year ago number, 5, and it had at one point even gone up to 6. So now this fall, many people are saying the bottom will be, last month we heard it. This month we are again hearing it. If it actually comes much lower than this, then rate cut expectations will once again surface. So watch out for this number very carefully. The other number is going to be food, which is a big number, 8.7, but that's more a base effect number. Look at the base, 2.9%, and that's why this looks very good. Now, there are some fears this could come in higher because vegetable prices have been rising, but data is indicating that that increase in veggies have happened more in June, first week of June, and that's the recency bias which is making us feel that veggies may be expensive, but we'll have to wait and see. That could also create some bit of tremors in the market, but the big tremor is actually not at all our numbers, because the number that will come half an hour after our number, the US CPI number, that is expected to come in at 3.4% for May. If it does that, then it will be a good number, because it will mean that month on month, that is May over April, the rise is only 0.1%. I'm saying only because April over March was 0.3%, and that's when all hell broke loose, and the expectations of the June rate cut started to get pushed back. So this number will be closely watched. If it is at 3.4, then the market will ignore our number completely. Just a word on the IIP number, that's expected to come in at about 4.9%, a little lower because there is a base effect. But I think policy-wise, it is CPI that's more important.
Thanks a lot for that, Lata. Well, we'll also have the US CPI and Fed decision that's due later this evening. CNBC's latest Fed survey shows that the US economy is gradually weakening. Steve Leisman joins us with details on that.
CNBC Fed survey growing a bit more hawkish since the last meeting, whittling down the probabilities for rate cuts this year and extending how long the Fed is expected to be reducing its balance sheet. Here are the numbers: 46% probability for September, 62% for December. Both are down from the May survey. Both are a bit below market pricing as well. 5.01, that's the average year-end funds rate. That is up a few points. And March 2025, that's when the Fed's expected to end quantitative tightening. In the prior survey, it was January 2025. Peter Bookvar, Chief Investment Officer from Bleakley Financial Group, he writes in with the survey, nothing in the recent data we've seen should give Powell confidence that it's time to cut rates, and I don't think he's going to be influenced by other central bankers that have already cut. More on that in just a second. Okay, so here's the outlook for the funds rate. 5.4 is the current one, goes down to 5 end of this year, 4.1 next year still, with the long run 3.3. So you can see the Fed expected to be above the neutral rate for quite some time. At the beginning of the year, the outlook for 2025 was about 50 basis points lower. Even while its outlook has turned more hawkish, the group of 29 strategists, economists, and fund managers has more concerns from the dovish side. Take a look here. What's the most likely scenario? The Fed cuts too late, say 66% of our respondents. 21% say it cuts too soon. That's the most likely scenario. And just 14% think the Fed gets it just right. Mike England, chief economist at Action Economics, he writes in, says, there are growing signs U.S. economic growth is beginning to weaken, perhaps as supply shortages across industries are finally dissipating, providing more two-sided risks to the economy. Still, respondents don't think the Fed should cut rates just because the real funds rate has gotten more restrictive with the fall in inflation. But they think the ECB did the right thing by cutting interest rates for just that reason. And of course, we have that CPI number tomorrow morning, which could actually influence the outcome of the meeting tomorrow.
All right, so this is exactly what we were talking about at the start of the show, that there is so many moving parts in the US macros right now that some clarity on where the rate cuts would happen, on whether they would happen, is something that the street would like. But meanwhile, you know, there are these asset management companies which are doing extremely well. So HDFC AMC, of course, is among the top gainers. You have Nippon Life as well, which has now moved to the high point of trade. So a gain of almost 4.5% for HDFC AMC and closer to 5.5% for Nippon as well. We'll take a short break.
Another one, Mangalam, Aditya Birla, which we don't talk about, which doesn't get talked about at all. I think that one is also has been rising silently because we don't talk about it too much. I think from about 560 has gone to about 640 odd rupees in the last couple of days, and I'm not sure if it's come back to its IPO price. I don't think it has. I mean, the listing was at about 715. The stock still at about 641. So huge underperformer, but it's trying to come up. This month it's up 22-23% or so. So yeah, AMCs along with what Mangalam mentioned, this one is rallying as well. A break, we are back after that. We'll get you a quick check on what Nimesh is picking up in D Street Chatter. And we'll also get a technical we'll get you some trades, buy, sell, or buy today and sell tomorrow trades, short-term trading ideas. Stay tuned.
Welcome back. Whirlpool is a stock that we're looking at. That's spiked up to the high point of the day. And for this week itself, Whirlpool is up more than 10% in just this week. It's been a bit of an underperformer, but that one's bucking the trend as we speak. But as promised, it's time for D Street Chatter. Nimesh joins us to tell us what is he picking up. Well, Nimesh, the trend continues. Some kind of consolidation on the headline index, but plenty of movers in the broader markets.
Well, absolutely, Nigel. It's been another day of big outperformance in the broader market stocks. The breadth is quite strong. And again, the Midcap Index is up 1%. But again, the feedback is this is backed by institutional buying as well. So flows are now shifted towards the broader market stocks, especially mid-cap and small-cap. Within the large-cap names, it's the PSUs which continue to attract a lot of flows and some select buying in the private bank names. That's the overall sense from a flow perspective. But again, the big event is the Fed meet tonight. That's going to have an impact on the market. So that's something to track. But the other big talking point in the dealing room has been indication of very large blocks coming very soon. I indicated 3 odd blocks yesterday. Again, today I'm going to add one more in the chatter list. But that's been the big talking point, that there are so many blocks and offers which are in the pipeline that we're going to see in the next few days. Right.
You had indicated a bunch of blocks. All of them happened, and it's block deal season back again post the result season. So what do you have on your list today, Nimesh?
Well, Mangalam, so the first stock on my list is Bandhan Bank. Well, the stock has been consolidating off late, but now I understand there's going to be a large block deal in Bandhan Bank very soon. If you look at the sharing pattern, a large private equity investor owns close to 7.5% stake, and I believe they're going to sell half of that stake. So that's one big large block which is expected very soon. That is Bandhan Bank. The second stock is Kriti Industries. We don't talk much about that stock. Very small cap. It's just 800 crores market cap. The stock actually doubled in the last few months, but all eyes will be on the board meet on 18th. They have a scheduled board meet for preferential warrants, and I understand some large investors are going to put money in that, and hence that stock is locked at 20% upper circuit. The third stock is LIC Housing Finance. Again, the housing finance space has done well, but LIC Housing stands out largely on back of very strong buy flows. So I understand some large investors are quite active buyers, and hence a big outperformance in that stock of late. And the last is Max Healthcare. Again, a big mover in that name, up 8%. Volumes are on the higher side. Again, the buzz is that maybe the company is very close to some acquisition, and hence that stock is buzzing as well in today's market.
Nimesh, the last one, Max Health. Anything else you want to add to that?
Prashant, there has been a lot of chatter about they're doing some acquisition as well, and they've done it in the past few months, right? So again, there is a very strong indication that maybe from the same northern region, they're likely to add some asset, which is going to be quite positive, and hence you're seeing a bit of reaction on that name as well.
Okay, all right. I'm just asking because there is one asset in the listed space which has been publicly, there's a large private equity investor which has been looking to sell their stake. We're not, of course, saying that it is that. We're talking about Healthcare Global, but Max from their side, as Nimesh is putting it, is perhaps looking at an acquisition. So we'll follow that story. We'll follow these stocks as well. Nimesh, thanks very much for that. So that's the list of stocks which are in focus on D Street Chatter. But let's get you some short-term trading ideas now. Midesh is back with us. Midesh, 50 points. So, there is that 3 p.m. sell-off which has happened, but still holding, and broader markets doing quite well. What are your trades?
Yeah. So I think the broader market, as you rightly said, that's where, that is giving the comfort of going long, though the index has cooled off from the day's high and once again failed to, hold above this level of 23,390. Earlier I was talking about taking profits in 50-60% positions. I think traders can wait out now, book out the entire position and wait out for a dip to play out or maybe a fresh breakout to take place. But on the stock side, I have VTST on Dalmia Bharat Cements. Keep a stop at 1884. Look for targets of 1925, 1930. And the other one which I like is VTST on Federal Bank. Keep a stop below 172 for targets of 176.5.
Okay, all right. Midesh, thanks very much for that. So individual trades. Let's talk about one name which is in some focus because stock's up. I'm talking about Jayaprakash Associates. It's listed and it had a catastrophic fall recently. Once that sort of NCLT order came through. But today it's up 5%. So what's happening? Ritu is joining us right now with details. Ritu, good afternoon. What's new?
Well, you have the National Company Law Appellate Tribunal that has done refused to stay the NCLT order, initiating insolvency proceedings against Jayaprakash Associates. And number two, it's also issued a notice to the lead bank, that is ICICI Bank, asking it to consider a one-time settlement proposal which has been submitted by the company. Now remember, last week the suspended board of Jayaprakash Associates had moved the NCLAT challenging NCLT's June 3rd order which had directed the initiation of insolvency proceedings, arguing that these proceedings will put the infrastructure projects of the company into jeopardy, and if these proceedings were not initiated, the company could have resolved its debt via a one-time settlement offer that has been in the works. Now their counsel during the argument stated that this involves splitting the entire 30,000 crore debt into three segments, repayment via the sale of plants for some and then restructuring of the debt for the rest of it. But keep in mind, it's going to be hard to believe that lenders will accept this one-time settlement because this has been on the table for a while, and despite this, the last we heard is lenders considering a sale to the National Asset Reconstruction Company. But even after that, of course, the company, as we know, was eventually admitted to the NCLT. So now the court, refusing to stay the NCLT order and directing banks to consider this settlement, is now going to next hear the matter on the 24th of June. Remember, JP Associates has an outstanding debt of nearly 30,000 crores, including interest, to 22 banks, and that includes ICICI Bank, State Bank of India, IDBI Bank, and others.
So on the 24th, Ritu, they will consider the one-time settlement, or will they consider the, sort of taking it through IRP and then selling it piecemeal?
Well, it's just the next hearing is on 24th, and that is the time that banks have been given to come back with whether or not they're willing to consider a one-time settlement by the company. And the arguments, of course, will continue in the court.
All right. Well, banks couldn't agree. It's a large consortium of banks. It's not one or two. I think there are about 15 banks more on that NARCL offer for 10,000 crores. So will they be able to agree for a one-time settlement, which we don't have the shape or form of? We don't know, but stocks up 5% right now. We'll take a break. We are back. More market talk on the other side.
Well, the down move on the market from the start of the 3 p.m. move continues. Now we have just a 50-point gain left on the Nifty, virtually at the lower end of today's trading session. And this one, apart from the Nifty Bank, which is down by almost 200, 300 points from the highs right now, sitting about 100 points away from that 50,000 mark. We have further sell-off coming in, both IT as well as FMCG. So HCL Tech, for instance, this morning opened with a gain of over 2% on that near $300 million deal that came in, and has now moved to the low point of trade. The IT index on the whole is just about breaking into the red, though a lot of stocks doing well. Nigel, you spoke about Whirlpool gaining. Look at the other what do you call, electronics maker. We have Amber Ent, which is up almost 6% right now as we speak. Bunch of stocks actually. Igarashi Motor, we have Titagar, which continues to move higher, Genus Power, and Jana SFB. That's the one that's up around 20% this month itself. Good to get in Mayuresh Joshi, Head Equity Research, William O'Neill joining in. Mayuresh, your thoughts on some of these consumer durables? They've had a good summer after 3 years of weakness.
Afternoon, Mangalam. Oh yes, and with the heat that is still on, I think the sales will still keep on going up for these players. So I think a lot of players who are into contract manufacturing, who have also got into original design manufacturing, players like Amber and Dixon selectively, will probably keep on doing well on two counts. One, I think the expected demand is expected to burgeon further in the next few quarters and years. And second, with their capacities and the PLIs that they probably have in terms of assistance, that should probably aid them along with the ODM growth, which should also abet margins to a certain extent. So yeah, I think as the discretionary spending patterns improve, both discretionary and durables from the consumption arena should continue.
Okay, all right. Mayuresh, what about a couple of these other names? APL Apollo Tubes, that's been one of the big outperformers. The stock is heading into these valuation problems, because it's not trading cheap at all. Been a big outperformer, the king of the market, so to call it, the largest player in there. But how do you approach it? Because if infrastructure is going to do well, some of these makers are going to do well, but maybe valuations have become a bit of a headwind. What's your preference from these tube makers?
Afternoon, Nigel. I think phenomenal run, and I think it has been all backed up in terms of the entire infrastructure story as well. The Nal Se Jal Yojana itself is a 70,000 crore earmark scheme, and expectations are that with further allocations happening in terms of rural housing and the commitment in terms of having Nal Se Jal, that is water taps across every village and town in India, I think a lot of these piping solution companies are going to find flavor. The second aspect, obviously, is in terms of capacities, the volume growth itself, and how input costs will play out. So as input costs have remained largely stable, even if there is a marginal uptick in input costs, there is a high probability of passing it through. And as that aspect takes place, the operating leverage clearly plays out. Obviously, I think the aspect in terms of valuations are damn expensive at this juncture, Nigel, as we speak. They're way above pivot levels of few of these players. But it is a very interesting space to be in. So I think investors who probably got into these piping solution companies, APL, Apollo, Astral as an example, I think they should continue holding the stock if you're holding it from lower levels.
Do you like any of the housing finance names? All of them have been abuzz ever since the news reports came out that there would be an increased allocation towards the Pradhan Mantri Awas Yojana.
So Mangalam, I think that is one aspect which is driving these stocks up. So I think within the space, LIC housing is something that fits our criteria at MarketSmith, both in terms of EPS, RS rating, institution holding, so on and so forth. A large base on their balance sheet itself is retail. The expectations in terms of solid advances growth should continue for the company. At some stage, at the end of this calendar year, there should be some element of a rate cut coming through. As that starts happening, I think NIMs and spreads should normalize as well. And all these aspects in terms of how the credit costs are shaping up, expectations in terms of solid growth expected to come through, as the real estate cycle still have 3 to 4 years left. I think there will be solid elements of growth to come through. So I think picking and choosing within the pack, I think LIC is something that remains on the watch list.
Okay, all right. Thanks very much for that short conversation, but please do stay on because we're going to come back after a quick break. Markets are going to close higher. Just a few seconds to go. Yesterday, of course, there was a sell-off and it was a negative close, but not today. I think we should manage a slightly higher close for the Nifty. At the bottom of your screen, advanced decline in the BSE, so firmly in favor of what was up. Bank Nifty will end up 100 points. That's just under about a 0.25%.